I will take you through some of the important sectors which have emerged over the last few years for alternative sectors which have emerged over the last few years for real estate investors. So first of all, very quickly recap of the traditional sectors. We have the residential sector, the industrial sector, which includes the logistics, office sector, and the retail sector. Now, the alternative sectors are typically the healthcare, the education sector, the economic infrastructure sector, and the leisure and hospitality sector. There are specialist operators working in these sectors which have a specific requirements to operate out of premises, physical premises. And as a real estate investor, we have an opportunity to develop, acquire these premises and lease them preferably on a long-term basis to the operator. So why they are considered alternatives? See, the traditional real estate is essentially an asset which provides it's useful to a variety of tenants. Think about a residential asset. One tenant goes, another tenant comes. But when you start looking at the education sector, then you have a very specific use for the school. So yes, the operator can leave those premises, but then you need another specialist operator that can use it. So traditionally, I mean, the alternative sectors have been seen as riskier. Okay, but as we will be seeing over these sessions and the next few sessions, the alternative sectors might end up being a safer source of income for real estate investors than traditional sectors which are going through secular transformations, as we have seen in the previous sessions. So how are alternative assets created? Think of a school. Okay, traditionally, the government will build the school and will operate the same of our hospitals. However, when the government requires the private sector to operate and deliver certain essential services, then the private sector operator will create an operating company. That operating company will enter into an agreement with the property company to lease the premises or to have a management contract to manage those premises with the net revenues being accrued to the property company, or a hybrid form of arrangement where there is a fixed payment guaranteed and a profit sharing agreement. So private investors will typically invest in the operating company as they are looking for high returns. So they don't want to use capital to own an asset. Okay, they want to have high return. They want to have an asset-light model. Real estate investors, conversely, they will want to have exposure to the asset and generate a steady stream of income. So because there are two sets of investors with two different requirements, the model can be created. So the property company is what will own the alternative asset, and it will closely work with the operating company. We will also see that this model works in some cases. In some cases, it doesn't work. So it has to be combined. The operating company and the property companies have to be combined. And then, depending on the degree of revenues coming from the operating model, in case there are third-party assets managed and the property company, the investment will become either a private equity or a real estate investment. And typically, banks will provide a very attractive level of financing to a property company because they have an asset to secure the mortgage, whilst if the operating company tries to borrow money, it might be extremely expensive. So this is another way that the funding structure can be optimized, essentially by taking by creating essentially a further step between the low lenders and the risk of running an operating company. Now, in this particular session, we will be starting with the healthcare sector. There will be 3 more sessions after this, where we will be discussing about the other sectors. So, to understand the healthcare sector, we need to have an ideal spectrum of healthcare services, which can go from higher acuity when a cure is needed to lower acuity where the care is needed. So in the higher acuity, we are going to have hospitals, and there are dedicated operators for the hospitals. This is where the surgeries take place. However, it is extremely expensive to spend a night in the hospital. So a second type of asset has developed, which is the rehabilitation center. And another type of asset is the primary healthcare center. So over the last 50 years, the way healthcare services are delivered to the general public have changed. Initially, there was the idea to have a there were multiple large hospitals to service the population, a certain urban population, but they are extremely expensive to operate. So the idea to shift more and more of the services to primary healthcare centers, GP surgeries, deliver. So the primary healthcare service is not just referring patients to the hospital, but it can also perform some form of minor surgeries. In the middle of the cure and the care, an asset class that has emerged is the life science research laboratory. Typically, what happens is that the hospitals are also centers of research. They are part of a larger campus, which houses a medical university alongside research life science park, where the private sector will perform research using also the personnel from the university and from the hospitals. So it creates an ecosystem which is extremely attractive for the real estate investors to operate, because the tenants of these premises really value that location, and it is not easy to replicate that location elsewhere. So right now in the market, there is a huge demand for space to open new life science laboratories. So real estate investors are really piling in. Now, as we move towards the care, okay, we have again care homes with two levels of care. One is called skilled nursing. This is really for people who have a need of having a medical equipment 24/7, and they can hardly move. They are really not. They are not independent in their livings. So that could be caused by age, by mental and physical disabilities. The assisted living is obviously it's a lower degree, so the amount of staff, medical staff required is much lower. Individuals, the residents have a greater mobility. And then really at the far end of the spectrum, one sector that is emerging is the senior living. The senior living, this is really independent living. So to a certain extent, it could be just normal residential properties, but it is slowly emerging as a well-defined sector, so addressed to active adults. Okay. So people that when they reach a certain stage of their life, maybe they retire from active work, they have a different requirement to live. Maybe they want to live in the countryside, they have a certain different hobbies, or they might want to live in the center of the city and enjoy the restaurants and the theaters that are in a certain location, but still with in a like-minded community. So you will not see this properties, say in the center, in the business district. Okay, it will be more in the, like in London, it will be close to the west end. So why is the healthcare sector so important, and why real estate investors and private equity investors are deploying a huge amount of capital? It has to do with the aging of the Western population. This used to be called the pyramid, the demographic pyramid, because the way it was shaped 50 years ago, it was literally like a pyramid. So the elderly population at the top was representing a smaller portion of the society, and then it was increasing. And people in 2020, 24, 30, they really represented the bulk of the population. The reality is that the reproduction ratio of the Western population, in some cases, is negative. So there are more people aging than new people being born. And what that means is that it has really taken this very strange shape, although it is still called a pyramid. Now, what is happening is that the population are aging, and you can see this. Let me take a spotlight here. Oh, yeah, spotlight. You can really see this. Also the projections. I mean, the solid bars, horizontal bars are representing in 2019. This is for the EU, the European Union, and if you want, the transparent bars represent where the population will be in 2050. And you can really see that the number of young people aged literally from below 5 to all the way to 55 to 60 years old, which is really the core active phase, they are actually reducing in percentage for the men, and even more for the women. Okay, whilst the people who are in retirement age from 65 onwards are increasing. And also you can see that the mortality rate, expected life expectancies of women is it's larger. So there will be more elderly women than elderly men in 2050. Now, if the population is going in that direction, essentially the healthcare spending is going to increase, and this is a forecast of the U.S. national health expenditures for 2021 to 2028. It's not even that far, and you can see that from 4.2 trillion or 4,200 billions dollars in 2021, this is really steadily increasing to 6.1 trillion dollars. This is a massive number if you just think about the size of the US GDP. And some of this will be publicly funded, some of it will be privately funded. So that means that there will be an increasing need of hospital, primary healthcare centers, and care home, skilled or with assisted, with skilled nurses, or just for assisted living. Now, the sector is in a flux. The operators that are trying to replace the government are not always creditworthy. So, as a real estate investors, it is going to remain a challenge to continue to invest in these sectors. There is a limited number of investment grade healthcare operators. So care has to be given to the quality of the income of these properties. Nevertheless, it is a sector that is generating extremely attractive yields. The demand of the properties is underpinned by solid fundamentals, and I am pretty sure that it will remain an extremely important allocation, will represent an extremely important allocation for real estate investors in the years to come.